Let's talk a bit about economics and especially macroeconomics. Now, macroeconomics is something that deals with economics of the overall system. Specifically, it deals with national level economics, a country's economics, its GDP, its budget, and stuff like that. The overall economic system of a country or a nation. So it talks of economics at a macro, broader, bigger level, not at the individual level, which is known as microeconomics when you are talking about economics of a household or economics of a business or one individual company or firm. Now, one would think that these are similar, but it's not. I mean, they work in different ways. It's like almost like quantum physics and relativity are a bit different. Physics at the subatomic level is different from physics at the everyday level, which is different from the physics at the cosmic level. So even in economics, microeconomics and macroeconomics work differently. Let us understand this by simple examples. Take household economics. I mean, basically you have your house and you make money and you spend money, and you have your own budget of how much you are going to spend on food and all those kinds of things. Now you can't spend more than you earn, right? So or I mean, you can, but then you have to borrow money, and that money has to be paid back. There is debt, and you have to pay that debt back, whether you take it from some relative or some bank or anything. If you are spending more, first of all, you have to have money to spend. If you don't have money, you can't spend it. Let us say people allow you to spend it by giving credit, or that is one way that you will pay him or her back later, or maybe you borrow from somebody and pay, but eventually you have to pay it back. So essentially this has to be balanced, the income that you get and the money that you will be spend. Either you have to have more income and you save some money, or you spend equal amount of money. But if you want to spend more, you have to borrow more, and that borrowed money is debt which you have to pay back. I mean, there are moral, legal issues if you don't, and you have to pay it back. Now, so basically, that is how a modern any household works, or any business organization works, right? But at the national level, the picture is different. Government can spend more than it earns. How does the government earn money? It earns money by way of taxes. That's what we think, that we pay various kinds of taxes, income tax and GST and all that, import duties, whatnot. And from these are the taxes which make up the revenue of the government, and from that tax the government can spend money, and that shows in the budget. And if the government spends more money than it earns through taxes, it's called known as deficit, right? Now the question is, how does the government, I mean, most governments in the world, including India, have been running deficits every year. They spend more than they earn. So how do they do that? They borrow money. Government borrows money from whom? From itself. Government borrows money from the Reserve Bank of India, which is basically part of the Indian system, right? So in a sense, the government borrows money from itself, and then it pays it back, and there is the whole interest calculation and all that. But the point is, it is not borrowing from somebody else. So what if the government doesn't pay back? What can the Reserve Bank of India do? It is like my left arm is borrowing from my right arm. I am borrowing from myself, fundamentally speaking. So what is the point of this whole exercise? It's an accounting gimmick. Accountants don't understand how to account for these things, and accounting has not evolved really to deal with macroeconomics, I suppose. So we still use the same accounting principles that we use for a normal household, for a normal economy. So there is debt and it has to be paid back and all that. But I am borrowing from myself. So why do I need to pay it back? And secondly, a household can't create money. You can't print money. Somebody has to give you money. Either you get salary from somebody or you sell something to somebody and all. You can't. The government of India through RBI has its own mint printing presses where it can actually print money. And you can even have, you can forget about printing money. Now it is all about electronic transfers. You can write a check of 500 rupees or 5 billion rupees, or maybe somebody just transfers X amount of rupees into your bank account without any actual paper currency. So you don't even need to print paper, but anyway, the government creates paper money. You can't do that, it is illegal. You can't do that, a business can't do that, even the state government can't do that, but the central government, the union government can do that through RBI. So government can create money, and that's money. So government can create money but still somehow borrows money. Why does it have to do that? That is an accounting nonsense. And this is something that is known as chartalism, which was mentioned first by a German economist called Georg Knapp. State theory of money and chartalism. Basically, government creates money, can create money. A sovereign government has the power to create its own currency. Indian government can create Indian rupees out of thin air, basically. It doesn't have to borrow from anybody. Where is Indian government going to borrow Indian rupees from? Because nobody in the world creates Indian rupees. If you need dollars, you have to go to the United States. If you need British sterling or British pounds or euros, you have to go to some other country. If you need some other currency, your government cannot create another currency. I mean, only the United States government can print US dollars. Indian government is not allowed to print US dollars. Similarly, US government can't print Indian dollars. But Indian government can print Indian rupees. Who else is going to do that? You are the only one. That is your own currency, and nobody else practically, except maybe Nepal and all, are using your currency. So there is a sovereign government with its own currency. So it can create its own currency. But still it somehow has this mechanism of printing its own money but still needing to borrow it and all that. So it is a stupid idea. Basically, it can print as much money as it wants now. Let's be clear. Nobody should be under any confusion about that. So it can borrow as much as it wants, or it doesn't even want to borrow. It can say, look, I'm creating this money and I'm giving it this money. I created that money and I'm giving it to myself. Who is going to stop me? That's my power, right? So all this nonsense of debt is all public debt. Debt in Indian currency on Indian government is useless. You will hear media reports saying that, oh, total government debt is so much, and that means every Indian citizen has so much debt on himself. That is complete bullshit. Local debt, Indian rupee debt on Indian government is a pointless idea. It doesn't mean anything. Yes, if Indian government borrows from United States in foreign currency, or it buys something and hasn't paid, so internationally speaking, it's a different thing. That is international debt, foreign debt. Just like you have to pay off money that you got from somebody. If you took a loan from somebody, a government has to honor its international agreements. If the government borrows from another government, then the same household economic rule applies. But when the government is doing transactions in its own currency, and that kind of debt doesn't make any sense. If Indian government has borrowed dollars from US, then that debt makes sense. Indian government would have to pay those dollars back. But Indian government borrowing from RBI in Indian rupees, that doesn't really make any sense. It's an accounting entry which they have to maintain, because that is the way it has been set up. It is not a natural law or anything like that. So debt on Indian government as a whole in Indian rupees is a stupid, meaningless idea. So don't worry about it. So basically, the difference between an Indian household or an Indian business and the Indian central union government is that the household cannot spend more than it earns, whereas the government can do, because the government cannot run out of money. It can print as much money as it wants or create money in its own currency, whether it borrows from RBI or it creates or whatever it is. So it can run deficits, and those deficits don't mean a damn thing. They are useless. It's an idiotic idea of having deficits. That is an accounting entry. So the deficit thing is a myth. Deficit, Indian government's budget deficit or total deficit in Indian, nominated in Indian rupees, is a myth. It doesn't exist. It's an imaginary idea. So there is a big difference between a household and the government. The government doesn't worry about where the money needs to come from. So actually the government doesn't even need your money, because it can create its own money. We believe that taxpayers, if we don't pay taxes, the government won't have any money. But the government can print its own money. So why does it even need to have taxation? It doesn't. Technically, it can have its own money without raising any taxes. Taxes serve some purpose and they are useful. It's a separate matter. Why taxes should be there and what can be the use and all that is a separate matter. But technically, theoretically, fundamentally, the government can create its own money, so it doesn't need to get any money from anybody, including yourself or your business. It doesn't need taxes. It can create money or borrow money from RBI, whatever that means. So it doesn't really, and it can run as much of a deficit as it wants. So we generally feel, where will the money come from? For you, it's a problem. For me, it's a problem. For a private individual, for a citizen, for a business, it's a problem. For the government, it's no problem. It can create money out of thin air. It can say we are going to print so much or borrow so much from RBI. It is just a mechanical idea. It doesn't really mean anything. So there is no dearth of paper money or currency, actual money per se, of that sort, which is a different thing. Currency and what it stands for and what it can do are two different things. Money is used to buy things. Now things are different. Resources, man, materials, machines, labor. That's a different thing that you use to buy stuff. You use money to buy services and products and all that, and those are actual things. There is a limit to it. Whereas money as an idea is an artificial idea. It can be created out of thin air. We have only some amount of gold, some amount of uranium, some amount of steel in the country, or some amount of crops and all that. There is a limitation to number of people, number of things, number of minerals, number of amount of oil that you can drill and all that. Those things are finite in nature, right? I mean, you have to import oil because you don't have oil in your country. The oil that you run, petroleum that you run, you get some petroleum, but you need more petroleum, so you have to import petroleum and oil and crude from other countries. So there is a limit to that. In your country, you don't do that. You have to import things, export things. That happens. But the thing that you use to buy things, that is money, there is no limit to it, how much money you can have. Government can create money. Of course, when it wants to import, it generally, if it imports in foreign currency, then it needs foreign currency. It can't print its own currency. So that is the whole thing. But within the country, if you talk of the system itself, the Indian economic system, then there is a difference between how you run your household and how the country's economy can be run. The government cannot run out of money. It can create as much money it wants. It doesn't need any money from anybody. It doesn't even need taxes to do its business. The government can run all kinds of programs and spend all amounts of money on anything it wants without even having any tax revenue. Let's be clear about that. So that's a big difference. You can't do that. They can do that because they have the power to print money or create money or borrow money from RBI. And it's like borrowing from yourself. You are borrowing from yourself. So again, doesn't make any sense. So that's a big difference between household and all that. And sometimes the other difference is what is good for the household is not necessarily what is good for the economy as a whole. For example, you would like to save as much as possible and spend as little as possible, or you don't spend more. And when there is recession and you are not earning enough, you try to cut down. If you are earning less, you spend less, right? So generally, when there is a recession, when there is a depression in the economy, and when you are not receiving enough money, and so what you try to do is try to cut down your expenditure. So you try to save money. So everybody tries to save money, and that is good for you but not good for the economy again, because then everybody tries to save money. Everybody tries to save money, so nobody wants to buy anything. When nobody wants to buy anything, what will you do with the factories and the labor and all that? They'll be idle, they won't have any work. There will be no production because nobody wants goods. So then the recession will only get worse. The recession that is there, economy is growing not fast enough, the GDP has slowed down, economy is not growing fast. And in that period of time, if individuals are not getting enough money, they try to cut down on their expenses and try to save more, then actually the recession becomes worse, because then there is no demand for goods and services. Nobody has any money, nobody is spending any money. So then factories cannot be run because there is no demand for their products. They have to shut down. They have to fire and lay off and terminate their workmen. Terminate the contracts of their workmen. Workmen are idle. They don't have income. So there is again a problem. Businesses don't make money, so they have a problem. They can't, they either cut down on their production or shut down their production because there is no demand. So they are unable to sell, they are unable to make money, unable to employ people. So they don't get incomes, the people they employ don't get incomes, and the recession only gets worse. So again, there is a difference. What is good for you is not what is the household economics and the national economics are different. And this was explained and demonstrated by John Maynard Keynes, the founder of modern macroeconomics. He was a British economist, and he came up with this idea that in a recession you need to spend money. Actually, you can't spend as an individual, but the government must spend. And his ideas bore fruit during the Great Depression years ago, and during the Second World War, and after that, and it helped England and Western countries. He was a British economist. I think he was a genius, and we still use Keynesian ideas, demand side economics. He said there has to be enough demand in the economy. Only then the economy can grow. And when there is a recession, you have less demand, less aggregate, less effective demand. So the recession only gets worse. So if the government also starts thinking like a household, that look, we can't spend money, we have to reduce our deficits, if we are not earning enough through taxes, we shouldn't spend enough, then everything becomes worse and worse, and you can never get out of that hole of recession. So in a recession, the government should spend more money without worrying about without worrying about deficits, that I am not earning enough through taxes, but I am still spending more. It can spend more because it can borrow from its central bank, or the RBI, or the British Central Bank, or the Federal Reserve in case of America and all that. Or it can borrow, or it can print, or whatever you want to call it. So in a recession, the government should spend more because the private industry and private people are not spending more. And if there is not enough spending, the money doesn't circulate, products don't get produced, factories go idle, businessmen go idle, labor goes idle, and these guys have different problems because they're not earning, and maybe there is starvation and poverty and all sorts of issues. You need money to survive, right? So Keynes said, in a recession, let households save, forget about them, but the government should actually create money, spend more money. And how do I do that? Spend money, find out things to do, find out things to spend money on. You don't know what you are going to do, ask some people to dig something, pay them for digging that thing, and then ask them to fill it up and pay them again. If you can't think of anything positive at all, then even that is good, because that means that you are paying some people this money to some people. So these people will get money, they will spend it to fulfill their needs. That money starts circulating in the economy, and start spurring economic activity, because money keeps on circulating. I spend, you get from my spending. I give you money to buy something from you. You in turn, you give it to somebody to buy something. So it moves around, and it creates multiple, it's a multiplier effect. And then the economy picks up, the money circulates, people are able to meet their needs, production of goods and services goes up, standard of living goes up, there is employment and all that. So as long as there is unemployment in the economy, I mean labor is idle, factors of production, man, money, machines and materials are available but not utilized. Factories are there but not working fully, or either shut down because of no demand, or either working only in one shift or two shifts, or not full capacity. There is capacity underutilization. People want work but don't have work, so are sitting idle. In those cases, that there is unemployment or underemployment or underutilization, non-utilization of resources, you can spend as much money as possible. You should spend so that these resources are utilized, and that's how you get the economy out of a recession. That is what Keynes did. That was his theory, and actually that theory was implemented. So it is not just theory, and it actually worked. And these countries were able to dig themselves out of the hole of recession and depression, Western countries. So this is one big difference in macroeconomics and microeconomics. At the individual level, whether you at a household level, at a private citizen level, at a business level, at a firm level, at a micro level, at the national level, there is what is good for you is not good for the country. The country does well, the GDP of the country goes up if you spend more money. But if you spend more money than you are making, more money and then you are in trouble. So it is not good for you, but it is good for the country. So these two are at odds with each other. And secondly, you have constraints of resources, money. The government doesn't have constraints, right? Because it can create as much money as it wants. So this is a fundamental difference between microeconomics and macroeconomics. And we talked of Georg Knapp and chartalism, where government can create money. We talked of Keynes, who explained this. And we will talk further on this topic. Thank you.